If you're tired of your money just sitting there, not earning much in interest, and maybe even getting taxed, then you're watching the right video, as today we're going to provide a guide on 2 market-leading products for Moneybox. I've personally been using Moneybox for over 3 years now, and in this video we're going to deep dive into everything you need to know about their lifetime ISA and their cash ISA products. We'll kick off by looking into the products themselves, before exploring the protection they offer, dissecting the fees, and finally unraveling the automation features you'll benefit with these accounts. But before we continue, it's worth saying that Moneybox isn't just about ISAs. They offer other investing and savings products too. And if you're looking for a broader overview of the app, a full review of the app, then you can check out one of my other videos. I'll put the link in the description below. If you're new to the channel, I'm Alex, a management consultant by day, and on this channel we like to talk about all things finance with particular focus on how to grow your money. And if you haven't already, I'd really appreciate a subscribe, as it really helped me grow this channel. So let's get into it, and let's kick off by deep diving into the products. And the first thing I've noted with the products is that they have something in common, and the hints in the name here. They're both ISAs, and they are both mechanisms to benefit from a tax-free wrapper where you pay no tax on the returns you make inside that wrapper. The other thing they have in common, and probably the reason why you're watching this video, is that both the cash ISA and cash ISA have extremely good interest rates. In fact, the cash ISA has the market leading interest rate at the time of recording. If we bring up a comparison table from Money Saving Expert, we can see that Moneybox's cash ISA tops the table for ISA interest rates. We can see at the moment it has a 4.25% interest rate, but it's worth noting that this interest rate is made up of a 3.5% base interest rate and 0.75% top-up rate for the first 12 months. So after 12 months, that interest rate reduces back down to 3.5%. The cash ISA isn't quite top of the table, has the next best position being in second. It has an interest rate of 5%, which again is made up of a base interest rate and a bonus interest rate. So the base interest rate is 4.15%, then there's a bonus rate of 0.85% for the first 12 months, making up a 5% interest rate. So they have 2 extremely competitive products in terms of interest rates for their cash ISA and their cash ISA. And the competitiveness of these interest rates is a similarity between the products, and a key reason why many people, including myself, have opened these accounts. But it's also worth saying that these accounts have many differences. So let's go through the specifics of each product one by one, and let's start off with the cash ISA first, as this is something quite new for Moneybox. With the cash ISA, there's some specific conditions around how much you can deposit in, when you can withdraw, and the minimum balance. So let's go through all of that. In terms of the product itself, it's an easy access product by nature, which means you can take out money when you want, but the number of times you can take out money is limited to 3 withdrawals every 12 months. If you make a 4th withdrawal in a 12-month period, then your rate will be impacted. Your interest rate will actually reduce down to 0.75%. So if you think you're going to make more than 3 withdrawals in a year, this is not the right product for you, as the interest rate will drop right down. It's also worth saying that you need to maintain a minimum balance of £500 in this account. If the balance goes below £500, the Moneybox will again use the interest rate to negatively impact you. They'll reduce that interest rate to 0.75% whenever the balance is below £500, meaning that this product is only suited to those who will maintain a balance of at least £500. The final restriction to note with the cash ISA is that you can only deposit up to £20,000 each tax year, and this is a combined total among all the ISAs you have. So these are restrictions you need to note if you're thinking about opening the cash ISA. You need to check that all of this will work for you. But even if this all works for you and you understand the tax-free return benefit, you may still have the question, well, what's the purpose of me opening this account? Why would I do it? What am I saving towards? And it's usually twofold. The answer to this is usually twofold. You usually open a cash ISA with either the purpose to use it as an emergency fund, or secondly, using the cash ISA as a fund to save up for a specific goal. Save up for a specific goal you aim to achieve in the next 5 years. For example, saving up for traveling or for a car. Goals you're looking to achieve in the next 5 years are suited to cash ISAs. And the reason for that is because the alternative would be either putting your money straight in your bank account where it's not earning interest, or putting your money in the stock market potentially. And if you put your money in the stock market in a 5-year time horizon, under 5 years, then you're exposing yourself to market fluctuations, and then you run the risk that the market will have a really bad period and you lose money. If you're looking to invest in the stock market, it's usually suggested that you should only invest when you're looking at the long term plus 5 years, as it gives your money enough time to recover from any market blips and make a positive return. So cash ISAs are a great mechanism to grow your money and help you achieve your goals as quickly as possible for goals which have a time horizon of under 5 years. They're a great mechanism to do this as the savings interest is good and you're not being taxed on it. So that's a very quick summary of cash ISAs. LISAs, lifetime ISAs, are very different in that they can either be a stocks and shares LISA or a cash LISA, and Moneybox offer both. And with a LISA, you do have some limitations around how much you put in, but you also have some added benefits. So you can only put in up to £4,000 each year in your LISA, but you have the benefit here in that you get a 25% government bonus on any savings you put in. So if you contribute the full whack £4,000 in a given tax year, the government will add an additional £1,000 to your pot. That means for every £4 you put in, you'll get £1 for free. And for lifetime ISAs, the reason you get this benefit is because you're putting your money away for the long term. That's why it's called a lifetime ISA, and the government is trying to incentivize you to put your money towards a long-term purpose. And usually this means either two things. So there's two main purposes which lifetime ISAs are used for. The first purpose, and the most common one for opening a lifetime ISA, is to use the money for a house purchase. So you can use your lifetime ISA to buy your first property up to the value of £450,000 anywhere in the UK. The second reason a lifetime ISA is opened and used is for retirement. So both of these are long-term focused, and you are limited to these purposes if you want to withdraw the money penalty free. As if you withdraw the money for any other reason, then you'll face a 25% penalty. And you may be thinking, well, I'm only going to lose out on that bonus, as that's 25% as well. But actually that penalty will mean you'll get back less than you put in, as although the percentage is the same, the percentage for the bonus, the percentage for the withdrawal penalty. With the withdrawal penalty, you're taking the percentage from a bigger pot of money compared to with the government bonus. So because you're taking the percentage from a bigger pot of money, a bigger amount is taken away. So for example, let's say you deposit £100 in any given tax year in the cash LISA, then you'll get the £25 government bonus, 25% of £100. But after then, let's say you decide to withdraw the money for a reason other than retirement or to buy a house. Let's say you use the money to fund a car purchase, a very cheap car for £100. In this case, you'll face the withdrawal penalty of 25%. So we're minusing 25% from £125, and that means we're minusing £31.25. That's an additional £6.25 compared to the bonus. And that means you're left over with £93.75, which is less than what you put in. So this example shows that if you open a LISA, you need to make sure you're going to only use it for the purposes of retirement or a home purchase, otherwise you face losing money. But let's say a LISA still works for you, you're going to use it for one of those two purposes and you fancy that 25% government bonus. The next decision you need to make is whether you choose a cash LISA or a stocks and shares LISA, and Moneybox offer both. And for the stocks and shares LISA, we haven't actually touched on what it is, what products you can get with that. So let's go through that first. And Moneybox keep it real simple with their stocks and shares LISA. They offer you 3 types of portfolios you can invest in through the LISA. So this is really simple. So they have 3 portfolios: cautious, balanced, and adventurous. And you can guess from the names which portfolio suits which type of investor. So the cautious portfolio aims for modest growth with low risk investments, so it has a low percentage of investments in shares and a high percentage in bonds. So this suits someone who's risk averse. The balanced portfolio aims for more growth with medium risk investments, so it has a higher percentage of shares and a lower percentage of bonds compared to cautious, and this suits someone who is maybe balanced with their risk appetite, wants a bit more growth but can't accept too much risk. And then we have the adventurous portfolio, which has an even higher percentage of shares compared to balanced. So this aims for the highest investment growth by accepting a greater level of risk, and it suits someone who has a high risk appetite and is very much looking in the long term. So it's very simple, these 3 portfolios. There's clearly not much choice in terms of the portfolios, it's a choice of 3. But most people will still be suited to one of these 3 portfolio options, as most people will fall into one of those 3 risk appetite buckets. And to be honest, in my opinion, Moneybox's focus isn't on their stocks and shares LISA, it's on their cash LISA, as this has been their star product for many, many years. They've become known for having the market leading rate for many years for their cash LISA, and this was the reason why I opened a cash LISA many years ago. And for the cash LISA, as we went through earlier, they have a very good interest rate, the market leading interest rate of 4.25%. And in terms of that interest rate, it's worth knowing that both the cash ISA and the cash lifetime ISAs, interest rates can go up and down as their variable interest rates. This may happen if the Bank of England reduces interest rates or increases interest rates in the future. And it's likely that the Bank of England will of course reduce interest rates at some point across the next few years, because they're historically very high. If we look at a graph over the last 15 years, the base rate at the moment is high compared to historical standards over the last 15-20 years. But even in that case, let's say the Bank of England reduces the base interest rate, even in that case, Moneybox still have a long-term record of being known for the market leaders for the LISA interest rate. And it looks like they're going to continue with the same strategy for their cash ISA. So even if the Bank of England do reduce the base rate, it's likely that Moneybox will be near the top of the table, if not at the top of the table, for the foreseeable future for both these two products, given their past record. That the whole interest rate environment may go down, but Moneybox is still likely to be near the top relative to its competitors, given their past record. But that interest rate may actually cause some concern for some of you in the fact they've been at the top of the table for so long. It may cause concern because they're a fintech and they're offering extremely high interest rates. You may be thinking, are they reliable? And I can only share my own experience here in using their cash LISA across the last 3 years. And I can say it's been a great experience, everything I expected. There's been no hiccups in the experience or nothing I thought, oh, that I don't like that. The worry for a lot of people with LISAs is, of course, am I going to get the bonus on time? Am I going to get it at all? Am I going to have the funds transferred to the solicitors when I need them for the house purchase? And in all these cases, it's been seamless with Moneybox. The bonuses have always been paid on time, and I've recently experienced the whole process with the solicitors receiving the funds as well. Unfortunately, I had a house purchase recently fall through, but during that process, the funds were transferred to the solicitor very quickly from Moneybox, and it was a very clear process for my solicitor. And when everything fell through, again, it was a clear process for the funds to be transferred back to Moneybox, and I can now see those funds again in my LISA account through Moneybox's app. So that whole process was seamless in terms of Moneybox transferring the funds and then receiving the funds and updating my account. Of course, this is just my own experience. Other people may have different experiences, but I think it's worth sharing to let you know that my experience has been very good. The other concern you may have is with the protection of your funds, whether Moneybox fails or whether a bank Moneybox uses fails. And here you're of course protected with FSCS, the Financial Services Compensation Scheme, up to the FSCS limit of 85k depending on eligibility. And the reason why you're protected up to this limit, why you're FSCS eligible, is because for the cash ISA and the cash LISA accounts, your money is not actually held with Moneybox, but it's held with a FCA registered bank, and the deposits in this bank are of course eligible for FSCS protection. You can see some of the banks Moneybox deposit in through the list right here. In terms of protection for the stocks and shares LISA, this is also FSCS eligible. You're covered in the event that the product provider collapses, but of course you're not covered if your investments lose money. If you invest in something and it loses money, you're not going to get that money back for FSCS, but if the product provider collapses, then you will get the money back. So in summary, these products benefit from the standard FSCS protection. And now, so far in this video, we've gone through the product specifics, we've gone through the protection you'll get. We haven't actually looked at how you open these accounts. If you want to look at that, I provide a full review in another one of my videos. The link is in the description below, where we go through how you open these different accounts. But in terms of this video, the next thing we need to know about these accounts is fees. And Moneybox doesn't actually charge fees for their cash ISA and cash lifetime ISA account, but they do charge fees for their stocks and shares LISA. And the fee structure is 3 levels. Firstly, a £1 monthly subscription fee. So this comes out of your account every month, it's £1. Secondly, a 0.45% platform fee. So every single year, 0.45% equivalent of the value of your portfolio will be taken as a platform fee. And thirdly, you have the fund fees, which you have with any kind of platform when you're buying funds. And these fees range from 0.12% to 0.30%, depending on which portfolio option you choose. So now we know all about fees. The last topic to cover in this video is Moneybox's automation and how you can deposit in the accounts. And Moneybox's features make it really easy to pay into their ISA and LISA accounts. You can either be traditional and do a one-off deposit with the usual payment methods, or you can use the awesome automation features from Moneybox, where Moneybox automatically collects money on your behalf and helps you save. And there's 3 mechanisms for this. Firstly, a weekly deposit, which is a recurring weekly payment for a set amount, which can be set or changed at any time in their settings page. Secondly, a payday boost, which is a monthly top up, so it's basically a monthly deposit, and this is collected on a set day of your choosing. And the third mechanism is roundups, where Moneybox rounds up recent transactions and adds the difference to the account automatically. And how this works is you connect your bank account, your main bank account, and Moneybox views the transactions in that account and then rounds up recent transactions. So the difference will be added to your account. And this makes it really easy to save into those accounts as it's less noticeable. Only small chunks of money are being added to your account, which you don't really notice as you just see them as round transactions. So that's a neat feature. And Moneybox's automation was what they were known for originally when they came onto the market. They were known for their automation and their cash lycer. So these features have been around for a long while and they work well. So I recommend using maybe at least the weekly deposit or the monthly deposit option to help you save, to keep you consistent, as they really are good automation tools. And that finishes off the video. And overall, although the stocks and shares lycer option doesn't offer too much choice, it benefits from simplicity. And to be honest, this is really a side dish to Moneybox's two main star products in their cash ISA and their cash lycer. These products benefit from great interest rates, and the historical record for Moneybox's cash lycer suggests they'll continue to benefit from great interest rates, and I'm going to continue using my lycer until I find a property to purchase. If you want to see the app, if you want an overview of the app, then I have another video you can click in the description below. I'm also thinking about doing regular interest rate updates on cash lycers, cash ISAs and savings accounts, different types of savings accounts, easy access, limited access, notice accounts and fixed accounts. So I'm thinking about doing regular updates on what are the best interest rates for each of those products. So let me know if that would be of interest to you, if you'd like those kind of videos. Also let me know if it won't be of interest, as it would save me a lot of time. Thanks guys.